Welcome to the Capital Discussions Trading Group 2 meeting. Today is April 25th, 2017. So welcome everyone. So Andrew and I were just talking before the meeting started about the French elections, the market, the VIX. It's been kind of amazing. Let's see, Serge had a question. Do I trade any road trips with ES? I do. In fact, I'm trading with a CTA, and most of the trades are with the ES futures options. And the commissions are $1.41 a contract to Interactive Brokers.
Tom, what expirations are available in the ES futures? Do they have everything that's available in ESPX, or are there expirations that are missing?
I have to compare it. I just put on a July the other day, but it was a normal monthly expiration. I suspect the SPX might have more weeklies, going out farther, but I'd have to do a comparison to line them up.
But the ES has an expiration every month. They just may not have all, the Monday, Wednesday, Friday weeklies. Is that?
Yeah, they have a monthly and like the normal third Friday, and then also the last day of the month, the quarter, the monthlies. So I usually trade those two, but I could trade others. Let's see. Still promoting people, sorry. And I saw Dan is here.
Yes, I'm here. Good morning, Tom. Good morning, everybody.
Oh, there you are. Let's see if I can switch the presenter role. Sometimes WebEx, it's weird. It won't let me right-click on you, but I can drag it down.
One other additional item on the question about the ES and the expiration cycles. I think they're actually pretty close to the SPX, but I don't think they're always exactly the same. One thing you have to do if you're using TOS is you either have to look at the actual futures contract itself that the options would trade under to make sure that you see all the expirations for that particular contract. You can either do that, or you can just put in ES, /ES, and then you can see everything. But if you just, for example, if you just now clicked on the active contract, the June contract, ESM7, you're not going to see the farther dated cycles. So you kind of play around with it a little bit to make sure that you see everything, or just type in ES, /ES, or / I guess, ES.
Yep. Well, Dan, I've got the presenter role over to you. So if you want to share your screen, I know I'm going to talk about the SPY put diagonal first today. Just get that out of the way and answer some questions.
We can do that. Do you have the PowerPoint? Because I didn't bring it over from the copy you sent me. Do you happen to have it?
I do. Do you want me to just share it, or I can just run the presentation, I guess?
You can
Well, you might want to share your screen, though. What do you think?
I will eventually share the screen. Yeah, maybe I should. Let's see. I don't know where that is. I'd have to go find it amidst my emails. So can we go back and forth?
Yeah, we can do that. So, let's see.
I think we'll just have to do it once.
Okay, that's fine. So let me share my screen.
Yeah, sorry about that. I just assumed that you would have it up, but
oh, no problem.
I realized that I should have been the one to do it.
Okay, so you should be able to see my screen now.
Yeah. Well, as Tom had mentioned, just by way of introduction in the announcement, as some of you that are in the road trip trade service know, I've been sending out forum posts for, I don't know, a couple months on my modification, my variation of the SPY put diagonal, and Tom and I have decided we're going to go ahead and open that up to a subscription service. If we get enough people who actually subscribe, we will continue, and if there's no interest, that's okay too. No hard feelings, no problems. We'll just discontinue it. But anyway, by introduction and by way of background, probably everybody or nearly everybody that is in this meeting, and I would guess most of the people that will ultimately listen to this meeting at some point, have probably traded diagonal spreads. And if you've done some research and done your homework, you'll know that there are many variations of this. You can do call diagonals, you can do put diagonals, you can do double diagonals. You can set them up for a credit. You can do them at the money. You can lean bullish or bearish. Many variations. Like most people out there, I have tried most of them. What I have sort of settled on, the one I like the best, and this is just for me. I'm sure there are many people, many traders out there who have a diagonal that they love and that they swear by. But this is the one that I like because it gives some degree of consistency, number one. Number two, when it's profitable, it makes good money and usually quickly. Number three, if you're a careful trader, which I'm not careful, all the time, as I will show you, the losses are small. And number four, I guess, for me personally, this is a lot of fun. And why is it fun? Because you never know exactly how it's going to work out, which is a characteristic of all time spreads. So that's the background of this. Tom, if you could go to the next one, I guess. We'll just give sort of an overview. Oh, you got to do that, yeah. Just sort of give an overview, and then, once we start the service, if we get enough people and if we continue the service, I will fill in the blanks, explain lots of details in the way that I approach this and some nuances of the trade. But basically, just as an overview, obviously, like all diagonals, long beta, theta positive. My variation, I try to start it at approximately delta neutral, and I will show a starting position, and I'll follow through one that worked out very well in option view later. I like to use SPY because they're liquid. I think I've tried diagonals on using SPX and other instruments, but I haven't actually tried SPX with this particular variation, nor have I tried futures with this particular variation. I think it would work, but I in the interest of full transparency, I haven't tried it. But I know that SPY is liquid. I know you can be filled and maybe only give up a penny. So I like that. And I also like SPY because I can set up a one cancels the other type of order, which if we start the service and keep it going, I will explain the rationale for doing that and exactly how I do that. And of course, the profits are generated by the time decay of the front leg, which will decay faster than the back leg. Everybody knows that. But the profits are also generated by, or losses, I should say, are generated by changes in volatility. So like all time spreads, this is a volatility sensitive type of strategy. And that's what makes it fun because you have to look at the interplay between the front leg and the back leg. They're constantly changing. I have a spreadsheet, as you know, with RTD links, and I usually monitor this, fairly closely, and I take my profits when I can get them, and I try to keep my losses very small because, like all time spreads, once volatility begins to go against you, namely dropping, it is pretty hard to dig your way out of the hole. And my current trade, which I will show on the spreadsheet, yesterday I could have gotten out of it for just a $90 loss right after we had the big run up. But since I enjoy this trade, I decided I would play it out and see if I could turn it into a profitable trade. The answer is no, I cannot. So that was a bad decision on my part. Now, obviously, once I begin the service, I'm no longer playing with my own fun money here. Well, I am, but I mean, I also know that I have people watching me. So clearly, I will tighten up stops. But I enjoy this trade because I like to see the interplay between the front leg and the back leg. The changes, as you see, the P&L may move from slightly positive to a healthy profit in a single day, and I've certainly seen that. I have been in these. The shortest time I've been in these trades is 2 days for a nice profit, but it's all dependent on both the time decay of the front leg, but also changes in volatility, which affect both legs, yes, but volatility will affect the back leg. So it's pretty careful. So you have to be careful the way you get in. You have to study everything, the IVs of both legs, like you do in all time spreads. And I'll go into that to some degree today, but I want to keep this fairly short. And so then when we start the service, and if we continue the service, I'll get into a little more detail on this. So what's the next one there, Tom? Yeah, this is my general setup. There have been, as everybody knows, you do the front leg 30 days till expiration, everything. You can go 20 days. Some people go out longer. This is a combination that I like for this particular setup because I want the profits to come in quickly, if the trade is going to work. I want to get in and get out as quick as I can. I've experimented with different DTEs for the back leg. I like 40 to 50. The longer ones, you would think might be better because there's going to be less in the way of time decay, but they don't seem to play out that way, in my opinion. So I like 40 to 50. And also, this has been sort of a work in progress since about the 1st of August of last year, and I've tried different strike separations. I've narrowed it down to having only 2 or 3 point strike separations. One reason being the margin requirements are less, and the trade just seems to work better. Now, I've had a couple of questions from people who've been interested in this setup, and the questions usually run something like this: well, what are your rules for the setup? What are the Greeks for the setup? What are your rules for the exit? Well, I'm sorry, there really are no rules for this because the initial setup is determined by the configuration of the graph. I start by looking at a short strike delta, which may be anywhere from 25 to 30, but that may not be the final short strike that I choose. It's determined by the graph configuration, which I'll show you. What's the next one, Tom?
Let's see. There we go.
So what Tom and I are going to do is it's going to be something like the road trip, but we're not going to have daily screenshots. Don't really need that. There will be a weekly short video review and a screenshot of any current position that are now in place. I will send text and email alerts of the new trades when I launch them. If I do roll a trade, whoops, my screensaver. If I do roll a trade, I'll send that out, and obviously a closing trade. And once again, of course, these are not going to be trade recommendations like everything we do here at Capital Discussions. This is an educational service. So subscribers may choose my strikes, may not, may choose my size, which will be a 20 lot. This will work fine with a 10 lot. Margins requirements are relatively low. For a 20 lot 2-point strikes separation in my Reg T account on Thinkorswim, it uses 4,000 of Reg T margin. The maximum loss on the left side of the graph, which you'll see, can be a little more, but it actually uses 4,000 for a 20 lot 2 strike width, 6,000 for a 3 strike width. So it's obviously $100 per contract per 1 point width. I think that's my last one on that, isn't it, Tom?
I think it is. So let me go ahead and stop sharing, and then maybe I can give you the...
Yeah, okay. Should I take some questions before I show some other stuff, or what do you think is the best thing to do?
There were a couple. I don't know if you can see the chat.
Yeah, I've got it here. What is the problem? The problem is always, how can we make a buck? That's the problem. But that's a simplistic answer, and I don't mean to be flippant about it. I'm not exactly sure what you mean, but I'll answer the question like this. The problem we're trying to solve is to monitor the interplay between the front leg and the back leg, knowing that the front leg is going to decay slightly faster, and that there will be changes in the P&L depending on changes in volatility, intraday. And you never exactly know what's going to happen, as you'll see on the spreadsheet. Sometimes we make our money from, purely from volatility from the back leg, and sometimes we make it simply from the time decay of the front leg. The SPY stays about the same, and the front leg, decays more rapidly than the back leg. Volatility doesn't change much, and we take our profit. Now, the opposite obviously can happen with a loss. Yeah, hi, Ray. Ray, yeah. Yes, this is a positive Vega trade. It doesn't. I wouldn't exactly view this as a hedge, but it is a positive Vega trade. So obviously in the market yesterday and what's happening today, my current position is clearly not doing well. I wish I had taken it out yesterday with a $90 loss. So volatility is extremely important, and the VIX, the VVIX, VXST are all way, way down today. So the volatility is dropping through the floor. Yeah, that's a very good point, Andrew, about the legs in the same venue. Yeah, that is extremely important. You don't want to mix the pit traded and the computer traded. I did that once accidentally. Not good. And Serge, I am going to show you that. So I guess I'm ready, right, Tom?
Yep, you got the presenter.
Okay, I'm going to going to try to speed this up a little bit because I don't want to take the entire thing here. So I guess I'll start with, you should be able to see my option view now, probably, right?
Yep, we do.
Okay, well, this is one that worked out very well. Just to give an example of how well that they can work. And this is one that I started on the 7th, and it finished up on the 11th. So that's, and this, the 7th I think was a Friday if I remember. So it was a pretty quick trade, and it looks like this. And as you can see, I'm leaning bearish, and I'm relatively delta neutral. You know, we're trying to ride the top of the basketball here. So I'm relatively delta neutral, but leaning bearish, meaning that the trade will do better if we drop off a little bit. And because we're long Vega, the volatility will pick up, and if we don't drop off too much, which is a disaster, which I will show you. I think I posted in the forum about one disaster that I had, that I thought I had a GTC order in to close the front leg, but I didn't, and we went down here someplace. So you got to have that order in, and I usually put it in as a one cancel the other. One order being to take out the front leg if you drop slightly below the short strike, and the other to take out the entire position as a profit, one canceling the other. So anyway, that's the starting position, and you can see relatively, this is for a 20 lot. Maybe I should move this over. I guess I should. See if I can show the other. Yeah. And so notice the difference in the IVs. A lower IV on the front leg, obviously, than the back leg, which is why we're positive Vega. But relatively delta neutral, decent theta. And I tend to monitor the delta theta ratio and the theta Vega ratio. So you might want to look at those numbers as well. Okay, so I'll just go ahead and grab, I mean, this is only basically a 2-day-old trade. And so I know that I took this out on the 11th at 9:17, so I'll have to go to BackTrader and show the 9 o'clock on the 11th. So you can see what this would look like when it goes off, one that really has worked well. Wait for this to come in a second. Yeah, so this is 826, which includes the commission. So that was a very quick turn on 4,000 of margin, and it looks like this. Now, I have learned over the years, as I'm sure most of you have, you don't want to think that you can, get this curve up here, because this is so volatility sensitive. You give it all back in a heartbeat. If the volatility drops, these curves are all going to drop. So I just, if I get a quick profit like that, I'm out. So that's an example of one that really works. What I'll do now is I'll go over to the spreadsheet just to wrap this up. And I need to start this out by saying that I started this in August. As you can see there, the 8th of August was my first one. I had my trades, in option view, but at this time I wasn't really posting these in the forum. These were just for myself, and I like to keep my option view, accounts very few. So stupidly, I guess, in hindsight, I deleted these. I thought I had these. I thought I had these in the cloud because I back up to Mosey, but no. Uh, my Mosey files were for the option view 7. These were done in option view 8. I've subsequently obviously changed my Mosey. But anyway, long story short, I don't have these. So I understand that this is a matter of faith. If you choose to believe me, which is the truth, but I have no way to document this. The only thing I can tell you is that right before I deleted these records, I did the report function of option view. I looked at the report and it was a little bit over 2,500, and I remembered that I had 4 back leg cycles. So I went through 4 cycles to generate the 2,500 from the 8th of August until the 1st of February. So then I started keeping these, and you can see if you look at these, I'll just take a few minutes to run these down. These during real time are real time prices, but once I close it, I just type in a number, and then it obviously becomes the real number. So you can see this one, there were 2 front legs, and so obviously lost money on the back leg, but I made more on the front legs, and it netted out with a 620 profit. This is not accounting commissions, so it would have been less than this by the commissions. So I don't know, 500 and 550, 560, something like that, from the 15th to the 28th. Then I started another one. This was not going well, so I took this one off right away because the back leg was dropping way, way too fast. The volatility was coming out of this way too fast, from 337 open price to 278. So I just took this out and I took my loss. This was, back then, I was using wider spreads than I do now. So this was a 5-point, so that was 10,000. The maximum was a 6-point, that was 13,000. I have subsequently tightened that up. Started another one here, and this is my disaster. This is the one that I did not have the order to close the front leg, and we completely blew through. I forget the details, but the spider completely blew through this front leg. It was down to like I don't know, 233 something. So that was terrible, and so you have to have a good till canceled order to take out that front leg if the market suddenly drops to slightly below the short strike. So that was a disaster. It's going to take me a while to make this up. The next one took a small loss for the same reason as this one up here. The volatility was coming out, and I saw I was not going to make this up. And I did not want to roll this one, so I just took it out. Okay, this was a quick one, 2 days. I took my profit. On this one, I made the money on the front leg, strictly from time decay. The back leg, as you see, did not decay much. This one was a 4-day trade. I did do one roll, which actually didn't do me any good. To do the roll, they often don't. I had a maximum 3-lot point separation, so that's margin of 6,000. So yield net was this on that 6,000. This is the one that I showed you in option view. That was just a single cycle, 2-point spread. It's a 4,000 margin, 23%, except, again, this is not counting commissions. You saw in the option view, this made about $820. And then this next one was a 7-day trade for 320. This is the one that I am currently in that, as I said yesterday, I could have gotten out at 90 cents. I decided to do a roll, even though there were only 4 days left, because I knew that's going to decay very rapidly, which indeed it is. But there is no way to generate a profit on this. So I'm just going to let this one bleed out a little bit and then close it at a loss. But of course, as I mentioned, once we begin the service, and if we have some subscribers, if we do the service, I will take this type of trade out at a smaller loss when it becomes apparent that it is not going to be a money maker. For me, I just, since this is just myself now, no subscribers, I'm just kind of playing this out for fun. The reason this is 13,000, it started out as 6,000, but when I rolled that, we had a wider strike separation, as you see there. So it's maximum margin is what I use in this column. So the bottom line is, this is a service that generally works well. It certainly does not have the win rate of the road trip trade. The returns can be substantial, as you see, on a yield basis when they work. There's a reasonable degree of consistency, but it's important to you cut your losses when it's apparent that the trade is not going to work, usually for volatility related reasons. The trade is a lot of fun, which is why I like it. And so we'll start the service, I think. And if we have enough people who sign up, and if people like it, we will carry it forward. I think that's about all that I had on this. Let's see if there are any other questions.
Yeah, there were a couple, Dan.
Okay. Let's see
when you
here.
do a second short leg, do you just close the short and open a new short at the same time?
Yes, I do. I usually do that as a roll. Now, there are some things you can do. I mean, for example, notice I only have 19 here on the new roll because I wanted to be a little longer Vega, thinking that maybe today we would have a bit of a pullback. Clearly, that did not prove to be the case. But I really didn't lose much more from where this was at the close yesterday. So it's actually, I'm not being hurt too badly. But generally, I just do a roll to the new cycle. And so the new cycle will, again, I'll choose the next one out that's somewhere between 10 to 15 days. I like to be closer to the 10-day, frankly. That's why, SPY is so good, because it's got, it's got so many cycles to choose from. You can almost always find one that's going to be 9, 10, 12 days out. Okay, and let's see.
There was a question about that, the big loss. Would a contingent order would it have still been a loss, or how would that have played out, do you think?
Yeah, that's a good question. Yeah, thanks for that. Well, the way that would have played out, once that would have been filled, once the front leg would have been closed, at that point in time, I looked at it, there would have been a small loss. And so what I do then is I reevaluate what's going on with the market. You know, do I think we're still going to drop? And if so, depending how many DTEs are left in the back leg, remember that I like 40 to 50. So let's say that I had 35 days left, and let's say the chart had been printing some pretty big red candles, and I'm stopped out of the front leg, but now I'm along the back leg and long Vega. So now I have both price action and volatility action in my favor. So I may monitor it at that point and maybe make a silk purse out of a sow's ear. So that's the way that I handle that. If it doesn't seem like it's going to continue to drop, I might look at doing a new short, a new front leg, depending again on the number of DTEs left in the back leg. Once the back leg gets fewer than 35 DTE, its time decay is going to begin to pick up, as everybody knows. So you have to monitor that. So I think that answers the question.
I think so. I don't see any other questions. I know we've got everything set up on the website, and then I'll put a link to a form for people to sign up for it. We were going to do a similar thing that Jim did with VolVantage, that the road trip subscribers would get 50% off, and if you weren't a road trip subscriber but any other expert service, alert service, or capital discussions, you get a 25% discount. So we're trying to kind of give you a loyalty discounts for people who are already subscribing.
Right, and I think that's a reasonable deal here, actually, given pardon me, given the potential yields of the trade. And as I said, if we do have some subscribers and we actually start and continue with the service, my focus will then change from this being just a fun trade to one in which I obviously will tighten up any losses and try to generate a nice expectancy over time. But I have this has been a work in progress, but I've now settled in on the configuration and the strike separation and the way to monitor the trade and the way to take profits and minimize losses. So that's what I plan to do going forward if we are able to continue the service. And this will be a trade that some people will really like, because we know that there's some interest, because we've already had something like 80-something people that were signed up for some sort of a trial, mainly just my forum posts. We don't know how many of those people, if any, will actually be a subscriber. But this is a trade that some people will really like for the same reason I like it. It's fun and usually profitable. And we understand there will be other people who say, Dan, are you crazy? You're actually doing a time spread? You're insane. I'm not doing that. And we understand that too. So that's the way that I'm looking at it. See, Tom, you're my partner in this and in everything. What would you make some comments?
Yeah, I mean, like you said, it has a nice potential returns. And Lewis just asked, "What's your cumulative P&L since you started?" I think you said it was 2,500, and it looks like the average margin is normally around 4,000 to 6,000. So it's pretty good return on a margin base.
Yeah, I think I can answer that a little better. I had the 2,500. How do I? Oh yeah. Oh, there we go. I'm sorry. I had the 2,500 up here, and had I mean, you can add the numbers up yourself if you play this back, but let's just say I had taken this debacle let's say I had taken a $200 loss on that one. I think if you add up the numbers, you'll see it's been a pretty good return. But I haven't actually done that myself. I probably should have. Again, I realize, most people, generally say things to me like, Dan, boy, you are really an organized guy. You keep track of everything, and I had you as my mentor, and you were very detailed. And generally, I am when I'm doing something that is going to help other people or as part of a service. But to be perfectly honest, when I'm just doing my own stuff, I'm not nearly as detail-oriented as people think, with the exception of, obviously, trying to make a buck. But in terms of keeping accurate records or doing something bonehead like, deleting that account, if it's just me, I don't try to be that organized. But if we start the service, obviously that changes everything.
And I guess, like I said, we've already have the page set up, so people can start looking at it. We've got a forum I just set up we can use for that, for questions for it too. So it should be a nice, simple trade. And one nice thing too is, you don't need a big account to trade this, because a 20 lot is, still pretty low margin. And if you need even a smaller trade, just, cut the number of contracts down.
Well, right, Tom. That is one of the appeals of this. I mean, this is not a margin-intensive trade. You have to have a little bit of cash sitting there in reserves for things like if you have to temporarily, have a wider or have a bigger margin because you have widened the strike on a roll. But generally speaking, if you only wanted to do a 10 lot, for example, the margins are small. There's enough consistency in the gains that you should be profitable over time. And, I'll keep the losses small as much as I possibly can. And I do about 2 to 4, maybe 5 trades a month, depending on how quickly I'm in and out. There's really no way to be sure. So, for example, if you simply sign up for a month, you will have some trades, and it'll be real dollars, and then you can evaluate if you like it or not. As I said, some people will like it because it generally makes money and it's fun. Some people won't like it because it's a time spread, and Tom and I fully understand that. I see there's a question. Yeah, boy, I should have mentioned that. Yeah, hi, thanks for asking that. Yeah, there is not so much a VIX level, although obviously when the VIX starts getting up around, over 20, I'm a little reluctant to put this on. But what I really look at here is the implied volatility of the SPY itself. And you can see what's happened here over the last, let me magnify this a little bit. You can see what's happened here just over the last 2 days. This is why the current trade I'm in is losing. When we were sitting up here and we first started to drop, and I could have taken just a $90 loss, but this is why you really need to be monitoring the IV of the SPY itself, because this is sort of a critical thing. Once the volatility, let me back out of this. If the volatility gets up, like say right here, for example, this is a risky trade, obviously. And this one, if you had put one on right here, that would not have worked well. Yes, you would have gotten a lot of premium for your front leg, but you're just asking for trouble. You just are asking for the market to rally and the vol to come down, and you're going to be creamed. Conversely, in this time frame over here, we had a fairly good decline, but the vol didn't really come up that much. So this was a good opportunity, and I was in fact making money on this trade in this period. So you do have to keep an eye on the IV and on the SV to a lesser extent, but you would not want to do it here. I don't know what the VIX would have been at this point. I'd have to go back and match it up. You can do that if you like. This is 11.4. But if the VIX is too high, yeah, this becomes a risky trade, and I just sit it out. If it starts to come back a little bit, for example, if it had been sitting in here, I might have taken it, and I think the trade might have actually worked, although I'm not sure. Because again, I'm only in this for anywhere from 1 to 5 days. So this one might have worked. Okay. I think that's all the questions, huh?
So far. Anything else you want to add about this trade? I did have a question. If the market has a big move up or down, how is the trade affected, and how do you manage it?
Well, if it has a big move up, obviously the front leg is going to be making money, but the back leg will be moving up just as it is now. I mean, if you recall, when I showed this, these are real time now. When I showed this earlier, this was my net loss here was around 490 or 480 something, and now it's at 531. So we're up quite a bit on the Dow and on the SPX, and the Spider itself is up 1.32. So the front leg is going to be making money, of course, but once the back leg gets around 35 DTE or less, it's going to be losing money. For example, look at this one. I bought it at 2.1, and now it's 57. So it's bleeding money, which is why this is losing at the moment. This is clearly going to be a loser, and I will probably close this thing today because there's no way I can make any money on this. But yesterday, when I could have closed this at 90 cents, the way these numbers looked, there was another short strike. This was this one. And this was up, roughly 2,000. And the long leg was down roughly 2,100. So that's sort of the interplay on these, and you just need to continually monitor this, which I will be doing as part of the service. But from an educational point of view, I would recommend that you do set up some sort of spreadsheet or some other way of monitoring. Maybe you can just want to do it on your platform of monitoring these real time, because it's a constantly changing trade, as you see here.
Okay, I don't see any other questions.
Yeah. Okay, yeah. I unfortunately took most of the period. Didn't really want to do that, but that's...
Well, not a problem.
Okay. All right.
It's always good to have you on, Dan.
Oh, thanks.
Anything you want to say about the road trip? I know we've had a few newer things we've been trying. Any comments for the people who might not have been keeping up?
Well, let's see. Today I did a couple of reverse Harveys on a couple of cycles, even though I don't like to do that on an up day. I didn't really have any choice today. It sort of forced my hand. Let's see here. We have a nice profit on the 5 May. This is Think or Swim, so So obviously disregard these numbers here. This is just the general configuration. But we were up yesterday about 2,000. We're off a little bit here today. I'm going to kind of follow this through and see if we get a little bit of pullback later in the day. Then I may just go ahead and exit the position. And one other thing I'm considering doing is taking off the baby butter and just flattening out everything and leaving us with the core butterfly and maybe just letting this expire. But as far as anything new, I had debit spreads on on one cycle. I had to close that because of the rally. It didn't take much of a loss, so that worked out okay. Most of our positions are doing well. I do like the baby butters. I've added them. As you can see, I have several cycles here that are not part of the class because like these are teenies, and those are teenies, and this is a far out hedge, and then this is one of the cycles, and I did a reverse Harvey on this one because we just have moved so far away from the butter. The trade's going to be profitable, of course, but we moved a long way away, so I'm not expecting to make a lot more money. It may be a little too late even to add a put credit spread, although that might be doable to bring in a little more money, but this is already using a lot of Reg T margins, so I probably won't do that. This is not a part of the service. This is a small lot that I did. What I'm doing in my own money now in this account and in my other private account that I trade, I'm doing every cycle, but on the ones that are not part of the trades that I show, I just do smaller lots, and I just basically let them sit. This one's up $139, and this is a 3 lot, I think. And let me see. Oh, this is only a 2 lot. I just let them sit there and just, make it. I mean, it's just like easy money. And Tom, you do the same thing, I know. And I think we have several subscribers who do the same thing. It's just easy money, not much margin. So I have a couple of those that I do. I guess that's relatively new, except I don't show these. This is the same on the June 9th cycle. This one's also a 2 lot. It's up $150, and I'll maybe try to take 300 or 400, and then just take it off, easy money. I did a reverse Harvey on this one, I think, today, right before the meeting. Had to do that. And again, if we start dropping back towards the baby butter, this is going to make some really good money. But otherwise, I'll have to do more reverse Harveys, and we'll just take what we get. It'll be profitable, but we'll just take what we get. And finally, this one, I haven't done anything yet. I do plan to add a baby butter on this one at some point, but on a better day, on a down day when I get better premium. But this one will need at some point a reverse Harvey. Of course, this is way out in June. This one will need 1 or more reverse Harveys, and I will probably add a baby butter to get a little more premium. So that's what I'm doing with the class trades. And
then I'm going to be adding that investor road trip, which is a little bit longer term and wider. It's looking for lower returns but less risk. It would be suitable more for an investor. So that's going to be added in there probably in the next week or so.
Yeah, and I think that'll be a welcome addition to the service. And I would encourage everyone to study Tom's variation of this, and that would be a really good setup to be parking some money that you are going to get a pretty good return, maybe not quite as good as uh, doing them every 2 weeks the way I do when you annualize the return, but it'll be a good return and a very, very low risk. I mean, it's practically investment grade, very low risk. So I would encourage everybody to take a look at that, and that is another part of the service that we're adding just to try to make it even better than it is.
A couple more questions before we wrap it up. Tony asked, when you say you do every cycle, are you referring to weeklies? I guess about 6 weeks, days to expiration when you first put one on.
Oh, yes, I'm for these small lots. I'm doing every cycle. So, in other words, I'm filling in the spaces that I don't choose for the so-called class trades. So, so for example, this is a class trade. This one is not. I might actually do this one. But this is a class trade, and this is not. So I added one here. And I don't mind doing these small lot trades. I don't need to be out the usual 70 to 80 days. I'll do these at 60 days. So in fact, if we have a down day, I assume that's going to happen at some point in time. I'm going to look at this one and do a 2 or 3 lot.
And Serge asked, are you sometimes forced to do an early reverse Harvey because of a bullish market?
Yes, like I was today, unfortunately. I don't like to do that because the premiums are not as good, but the way I view it, you have to protect the position. And, if from the expiration graph, which I monitor in using option view, not in thinkorswim, I have got to get the right side of that curve above zero, and preferably at a reasonable profit. And what do I mean by a reasonable profit? Well, I don't know how long you've been following the service, but even on the trades where we have a bullish market and we have a sustained rally, I still try to make $500 or $600 on our $20,000. That's less than what we usually make when the market cooperates, but I try to make every single one of these close at some kind of profit. And I know, Tom, in our managed money accounts, we do the same thing. Tom, you want to weigh in on that?
Yeah, you can't wait too long.
Yeah.
If it's moving up and it's getting safer and safer, less risk that you're going to be hit on the downside. You can't wait too long to start adding those verticals and lifting that right side up.
Right, exactly. And so that's the reason, many of you have seen this part of my spreadsheet. That's the reason that I monitor where we are, where the SPX is now relative to where it was at trade launch. And you see why my hand was forced here on the 16 June. We're up 2.38% from where we started. So you've got to protect the overall position by getting the right side of that curve up, and that is kind of a critical thing.
And there's a question about the monthly results we report. That's the trades closed in that particular month. So those are closed positions, including commissions. And then Larry asked, on the SPY diagonal, are the commissions included in your gains and losses on your spreadsheet?
No, not on the spreadsheet. I can probably.
What does TOS charge for commissions on SPY options? The same as everything else, I would think, right?
Same as everything else. I pay 80 cents a contract, and I realize that that's at the lower range. So I guess I could include these on the spreadsheet, but it's not going to be the same as everybody else gets. Some people may get lowers, but I think most people will pay a little more.
And then Brian asks, in a grinding up market, do you have guidelines of how many reverse Harveys to get the upside to break even? Well, we start with that upside break even less than 5% of the margin, so it usually only takes one or two, in my experience, to get it positive.
Yeah, same here. And then from that point, for example, Brian, I'm sure you have seen in some of my text alerts, I'll say that I may need to do an aggressive reverse Harvey. What I mean by that is I'm going to have wider strike on the reverse Harvey because I've already raised it up above the zero line, but now we're so far above where we started. Now I'm trying to capture that $500 to $700. Without totally destroying the butterfly configuration. So I do vary the strike width on the reverse Harveys, depending on how many days are left, on whether I'm seeking just to get the right side of the curve above zero, in which case I'll have a narrower strike separation versus the situation in which the right side of the curve is already above zero, but now I'm trying to generate that profit that I mentioned that Tom and I like to get on every single trade. So then I may be doing a few more reverse Harveys than usual, and they may be a little bit wider. Now I'll usually make it a condor type of trade, meaning that I'll roll up the lower wing to keep the margin requirement about the same.
Well, Dan, we're a little over an hour, and I think we've gone through the questions. So I think this is actually a pretty good place to stop. So thanks for taking your time. It's always good to have you on, even not necessarily roundtable at the trading group meeting. So we didn't really talk trading group kind of stuff, but it was nice to have you here as a convenient time.
Well, thanks, Tom. Always good to be here. Again, my apologies. I thought this was going to be 30 minutes. So if anybody was going to present something today, my apologies on this, that it ran for the full hour. That was not my intention.
No, you were the only one scheduled to present anything, so don't worry about that.
Oh, okay. All right.
All right. Well, thanks everyone. I'll get this posted as soon as possible, and I'll put the links to sign up for the trial of the SPY put diagonal, so people can start joining us for that and take a look and see what you think.
Well, thanks a lot, everybody, and thank you, Tom.
All right. We'll see you, everyone.